Hello everyone. In this video, I'm going to explain you revised version of company final account. See, the company final account, which consists of two basic financial statements. First is form of statement of profit and loss, and second is balance sheet. In old format, it has three divisions, that is trading account, profit and loss account, and balance sheet. It is in the form of horizontal form or T format. But here, as per revised version, that statement of profit and loss and balance sheet have to be presented in the vertical format, that is in the statement format. Now let us see each and every content of statement of profit and loss account and balance sheet. See the format. Here we have three columns. As you can see here, first we have to write heading, name of the company, and statement of profit and loss for the year ending. Now, as you can see, we have three columns. First column is for content. Here you need to record. Then second column is note number. Here you need to record working note number. Then third is amount column. Here, when you prepare for one thing must be remembered, that when you prepare final account, you need not to show any calculation in the profit and loss and balance sheet. You need to record only final amount in the statement of profit and loss account. So here, as you can see, that here first one is revenue from operations. It is the revenue earned from its business operations, that is its operating activities. For example, revenue from operations for a trading or manufacturing company shall be sale of products, sale of services, and other operating revenues. In the case of a finance company, it may be interest, dividend, then profit from sale of shares, and income from other financial services. Then we have other incomes. Other income means revenue that is not revenue from its business operations. For example, interest income in case of a company other than finance company. Then second is dividend income. Then net gain or loss on sale of investments. Then other non-operating income. Now, in the third point, we have total revenue. If we add revenue from operations and other income, we will get total revenue. Now, fourth, expenses. Expense here means expenses incurred to earn the income shown under various heads, as it is shown below. First is purchase of stock in trade. That means it means purchases of goods for the purpose of trading. Here it is. Then next we have changes in stock. It is the difference between opening stock and closing stock of finished goods, work in progress, and stock in trade and closing inventory. Then we have direct expenses. Here under this we have to record direct expenses. Then we have employees benefit expenses. That means expenses incurred on employees towards salary, wages, leave encashment, staff welfare, etc. are shown under this head. Employees benefit expenses may be further categorized into direct and indirect expenses. Then we have finance cost. That is, it is the expense towards interest charges during the year on the borrowings. Only the interest cost is to be shown under this head. Other financial expenses such as bank charges are shown under other expenses. Then let us see next. Then we have depreciation and amortization. Here, depreciation is the diminution in the value of fixed assets, whereas amortization is writing off the amount relating to intangible assets. Then we have other expenses. All other expenses which do not fall in the above categories are shown under other expenses. Other expenses may further be categorized into direct expenses and indirect expenses and non-operating expenses. Now, if you add all these expenses, you will get total expenses. Then in the fifth point, here you need to find out profit before tax. In order to find it, you need to subtract total expenses from total revenue. So you will get profit before tax. Then after then, we need to record provision for tax. And then if you subtract it from profit before tax, you will get profit after tax. Now let us see the format of balance sheet. So here is the format of balance sheet. In the balance sheet, you need to first write the name of the company. Then you have to mention time period of which you are preparing it, that is balance sheet as at. Then here, as you can see, we have 3 columns. So in the first column, here you need to write content of balance sheet, and here you need to write, and in the second column, you need to write the working note number. And in the third column, you need to write the amount of each and every content of balance sheet. See, the balance sheet consists of two main headings. First one is equity and liabilities, and second is assets. Equity and liabilities and assets and their subheadings are shown in first column of particulars. Every head has subheads. Subheads also comprise of various items. The size of balance sheet becomes abnormal if all the items are shown at one place. Therefore, subheads are shown under main head. Notes to the accounts are prepared for every number shown against subhead to show various items of each such subhead. And third column, as you can see, it is for amount. So here, as you can see that first one is equity and liability. Under that, it has 3 categories. Shareholders fund, which is called as equity, and all other 2 components, 2 categories, that is non-current liabilities and current liabilities. These are called as liability. Under shareholders fund, again we have 2 components, that is share capital and reserve and surplus. Then under non-current liabilities, again we have subheads, that is long-term borrowings, other long-term liabilities, long-term provisions. Then again in current liabilities we have some subcomponents, that is short-term borrowings, trade payables, other current liabilities, short-term provisions. So if you add this, you will get the total of equity and liabilities. Then below that, in continuity, you have to write assets. Here, as you can see that assets are divided into 2 categories: non-current assets and current assets. So under non-current assets, we have fixed assets, which is divided into again 2 categories: tangible assets and intangible assets. Then we have non-current investments, where under that we have long-term loans and advances. Then others, non-current assets. Then we have current assets. Under that, we have current investment, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, then other current assets. Again, you will write the total of all these items. So you will get the total of assets. So these are the format of profit and loss and balance sheet. So I hope it is clear to you all. Thank you very much.